We've seen that historically multiple times, and I think it's the last 7 out of 9 precious metals bull markets, and you can measure them different ways. They could be secular or they could be cyclical bull markets, but 7 out of the 9 last bull markets, silver outperformed gold. Admittedly, it did it more in sort of the latter half of those bull markets, so it tends to sort of catch up and then outpace gold as it runs up, sort of later in that bull cycle or secular market, but it almost invariably does outperform, and I wouldn't expect it to be necessarily different this time. Once again, different reasons, some black swans and some gray swans to come would potentially bring silver to perhaps $45 sometime before the end of this year.
Gold may grab the headlines, but history shows silver is the real underdog. In 7 of the last 9 bull markets, silver didn't just catch up, it overtook gold. And in 2025, the same setup is forming all over again. Right now, silver has climbed nearly 25% in just 8 months, while investors and industry alike keep piling in. But the real story is what happens next, and why analysts are quietly setting targets that could push silver to levels we haven't seen in decades. Let's break it down. Here's the pattern Peter Krauth points to. Silver tends to lag in the first half of a precious metals bull market, then accelerates later on. It plays catch-up and overtakes gold once momentum builds. The history backs it up. In 2020, silver surged nearly 48% compared to gold's 25%. In 2016, silver prices jumped 15.8%, almost double the 8.5% increase in gold prices. This year, silver's rise, about 25% over the past 8 months, is being driven by both investor demand and industrial growth, according to Sprott. It hasn't reached record levels yet. The high was $49 an ounce in 1980, but it's getting closer. Looking ahead, Krauth sees $40 silver as realistic by year-end, with the chance of a spike to $45 if unexpected events hit the market. The all-time high was near $50. That seems achievable, although probably not in the near future, but instead in 2026. As noted by Morgan Stanley, silver's lower price point makes it easier for investors to adjust positions based on market conditions, providing greater flexibility in portfolio management. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I actually hope that this consolidation will continue a bit and that we may even see a bit of a smallish correction. I think that would be the healthiest thing for this market. It is quite solid and quite strong, and I do believe that it's very healthy. The last few times that we were at these price levels, if we look back a decade or a decade and a half almost, things had gotten ahead of themselves. And then after that, it was in correction mode around, those high 38s or even 30s. So this time we've gotten there much more gradually, and I think this is a clear sign of a growing bull market and much higher prices to come. But as you said, we ran up 30, 32, 34, 36, 38, up to 40 even in the futures prices, and now we've corrected back to 37 and change. I really think that we're due for at least consolidation. My ideal would be to see a little bit more correction. Frankly, a couple dollars off of the price would be very healthy. That may, take a little while longer, a few more weeks, maybe a month or two, probably not even that long, but that would be the best thing. And then we would probably continue to head considerably higher through the rest of the year.
And what kind of prices do you expect going into your end?
So I think that we're going to see probably something along the lines of, and it's not a stretch, but $40. I've been saying for probably since at least the beginning of this year, $40 was very likely at some point in the second half of 2025. It was less obvious back then. It's more obvious now since we've all already touched it, but that was my feeling then, and I think it's very realistic still. I also think that, things pick up and they could well, for, different reasons, some black swans and some gray swans to come would potentially bring silver to perhaps $45 sometime before the end of this year. not sure that it would necessarily stay there, but the all-time high of $50, I think, is very much within range, but probably at some point only next year. That's been my expectation for some time, and I still feel that way about where silver could be going. If you look at the forecast for investment demand of physical silver. I'm looking at the numbers from the Silver Institute again, and they see a little bit of growth, sort of moderate growth over last year. It was 190 million ounces of coin and bar demand. They see it at 204 million ounces for 2025. I think that's actually going to be, once again, an underestimate. That's only 7% growth. I think that if you look at different places like India, China, Turkey, Egypt, and then if you look at even at the West, the amount that there's been of sales of physical silver at places like Costco, Walmart, and so on, I think that we're going to see that number is going to turn out to be much too low, about 204 million ounces going to physical investment this year. What's interesting too is that because the way the Silver Institute presents their numbers, they show total supply and total demand. However, the investment of silver that goes into ETFs is shown outside of those two numbers in terms of the balance. So if you exclude silver flowing into silver ETFs, then the deficit, the structural deficit that they're forecasting for 2025 is going to be 117 million ounces. However, and I think, frankly, that it's a little unfair to not include the silver that goes into ETFs, because by the same token, silver that gets purchased physically as opposed to buying ETFs, I mean, their argument is that, that silver is not consumed, and that silver can easily flow back to the market to be consumed if necessary or whatever. Well, you can say the same thing for physical silver. It's not consumed. If it's bought, for investment purposes, it's purchased and that could easily flow back. So I feel it's more fair to include silver that goes into silver ETFs in terms of overall demand. So they think that that's going to grow pretty significantly. They said it was 60 million ounces last year. They think it's going to be 70 million ounces this year. Again, I think that's going to be an underestimate. But here's the really interesting part. If you leave out silver in silver ETFs, then, as I was saying before, your deficit for 2025 is forecast at 117 million ounces. But if you include the silver that's going to flow into silver ETFs for the forecast, your deficit is 187 million ounces. And that is a much, much smaller drop than is forecast when you exclude it in terms of the deficit. In other words, the deficit will be almost the same as last year if you include silver flowing to silver ETFs. Now, there's a lot of numbers and facts and figures being moved around there, and it might get a little confusing, but let's just kind of keep it at this, or to summarize. The deficit expected for 2025 should be 117 million ounces, which is less than last year. But if you include silver flowing into silver ETFs, the deficit is expected to be very close to last year's. So I think it's very significant, and I think that it's going to have impact. And I also think that, their estimates are too low in terms of, not being sort of fair or aggressive enough in terms of, the investment demand for silver. Think about this. We're close to all-time highs in gold. Gold is arguably, I suppose, there's different ways you can look at it, but it's not as cheap as it was. I would still consider it cheap, but it's not as cheap as it was. And yet silver is still very cheap. And if you look at the gold-silver ratio, there's no doubt on that basis, it's still very cheap. You see gold start to take out 3,500 and 4,000 in terms of, these psychological levels. People will really start to pay a lot more attention, and they're going to say, I'm getting 1 ounce of gold for, $4,000, whereas I can get 40 ounces of silver for the same price. I'm not even sure if my math is right there, but it's 100 to 1. So I think it's something like that. And they're going to start to ask themselves if silver is at, if we make it easy, $4,000 versus $40 for an ounce of silver. Sorry, it's 100 ounces of silver for 1 ounce of gold at that point. And so people are going to say, you know what? Why don't I just buy some silver? And I don't even have to buy a full ounce like I would have to. You don't have to buy a full ounce of gold, but it's a lot more common. Anyways, you're getting arguably a lot more for your money, and I think that is going to drive a lot more buying silver as well.
Peter Krauth points out that silver's industrial demand isn't slowing, it's accelerating. Roughly 1 billion ounces of silver came from mining and recycling last year, and almost 70% of it went directly into industrial applications. Solar energy alone accounted for 20% of the global supply. The Silver Institute projects industrial demand will flatten this year. Still, the data doesn't support that forecast. China, for example, installed more solar capacity in the first half of this year than it did in all of last year, which means photovoltaic demand for silver is likely climbing, not leveling off. Some argue there's plenty of silver sitting in private hands that could return to the market if needed. Krauth agrees, but he stresses that the real question is price. Most silver stackers aren't selling at $33, $35, or even $38. They're waiting for $45, $50, $60 or higher before they release that supply. In short, it will take a significantly stronger price surge to extract metal from private hoards. Meanwhile, the Silver Institute acknowledges that the market is likely to face at least 5 more years of structural deficits, with each year likely to set new records. That imbalance is a serious challenge for industry, but it's precisely what creates opportunity for investors. When demand consistently outpaces supply year after year, prices eventually have to rise to restore balance. Let's get back to the interview.
Industrial consumption has been going up. The Silver Institute is forecasting that this year it's going to be slightly down from last year, total industrial consumption. But consider this, total supply last year, if you forget about secondary inventories, just supply from mining and recycling of just about 1 billion ounces, yet industrial alone was 680 million ounces. So 68% of all of the mined and recycled supply went strictly to industrial uses. And photovoltaics, which is solar, represents 20% of demand of all of the supplied silver every year. So this one application is 20%. The Silver Institute thinks that we're going to see solar kind of the demand from solar for silver kind of flatline, and industrial demand as well overall more or less flatline this year from last year. I think that's going to turn out to be wrong. I think that they're underestimating the demand. I can point to things like, you talked about AI and data centers. I saw some numbers recently about solar installations in China. And because of government stimulus, it's gone through the roof in the first half of this year, and it's gone well beyond. I think that the first half of this year has already surpassed last year, all of last year, in Chinese solar installations. And as we know, they're the biggest producers of solar, the biggest installers of solar. So that really suggests that demand for solar will continue to go up, and the required silver along with it. There's always this argument that we're not going to run out of silver. There's plenty of silver that's being held by private investors, and that they will, so to speak, dishoard their silver as the market requires. And I don't disagree with that. I guess where I disagree with some observers or analysts is the price level at which these people are going to be willing to sell their silver back into the market. And these are in many cases what we call stackers, silver stackers, and they're adamant about buying and holding onto their silver. They're not prepared to let go. Many of them will not let go at any price. But I'm willing to admit that you will gradually get high enough prices that will have them, sell their silver back into the market and help provide supply. but I don't think it's at $33 or $35 or even $38. I think it's going to be a lot closer to $45, $50, $60, and $70 that we're going to see that supply come to market. So, and that's, that speaks to your question, which was, what that's going to do for silver. Well, I believe that we will get this demand met to some extent, at least, not fully, probably, but to some extent it'll be met, but at much, much higher silver prices. And that's where silver needs to go if you look at these structural deficits, because these secondary inventories are down about 70% over the last 4 years. And there's no sign of that ending. In fact, the Silver Institute themselves have said that, that was, I think, in this year's silver survey, annual silver survey, they said that they thought that we're going to see these structural deficits continue for at least the next 5 years, and that we would probably see new record deficits being set along the way, because mine supply has just been completely incapable of bringing out any meaningful new growth to silver. We peaked in 2016 at 900 million ounces of silver from mining. Today we're at 835 million ounces, and yet we're facing bigger deficits than we've ever seen. So, it's tough for the industry, but it's fantastic for investors. And I think that my feeling is, at least for the most part, since the inventory started to come down from early 2021 in silver ETFs, I think that most of that was probably the big industrial consumers. They had to get it. They were able to get some of it off of the exchanges, and there might have been some private inventories that, where we can't necessarily track, that we're able to flip it and, sell it to industry. But I do think industry was consuming most of that. I'm not sure that there were that many private investors necessarily, turning in their units of silver ETFs to get the physical silver. There probably was some of that, especially if they wanted to get significant amounts, because that was certainly one way to do it. But it's interesting to see that the silver that's held by ETFs bottomed towards the end of last year, and that we've started to see that climb again. So we were the peak in silver held in silver ETFs globally was about 1.2 billion ounces. It bottomed around 950 million ounces. I'm going to say towards the end of last year. We've seen that start to climb again. In fact, I like to look at the numbers from SLV ETF, which is the world's largest ETF. It's very, significant. It carries about half of all of the silver worldwide in terms of ETFs. And so we saw that go through some interesting gyrations over the last couple of years. I'm actually looking at a chart of it right now. And interestingly, it bottomed right around, I'm going to say June of last year, around 410 million ounces. It quickly ran up to about 480 million ounces. And then interestingly enough, before that, by the way, from, early 2021, it just kept falling from about 500 million ounces to about 400 million ounces. So about 100 million ounces got sort of sucked out of SLV alone. As I say, it started to rise through last year, the second half of last year, peaked around November or so, quickly dropped off. Now, what I find interesting about that is, if you think about the timing, that's when, we started to hear about things like that was right after the election in the U.S. That was when we started hearing about the possibility of tariffs. Nobody knew for sure on what kinds of commodities or other things that these tariffs could apply, and there was concern. So a lot of silver flowed into the U.S. And you see a similar sort of sell-off in the silver holdings of SLV in the fall of last year, and that bottomed right around the beginning of February. So right around after Trump was actually inaugurated, and then we started talking, more about these tariffs. There was some clarity, I think, shortly after that, but then the holdings in SLV ETF have absolutely soared again from there. They were 430 million ounces at that point, and today we're well above 480 million ounces. So the silver holdings, the physical silver held at SLV, does not move that in as much lockstep as the silver price itself. But it's interesting if you look at what goes on, macroeconomically, and you look at the silver held in that ETF, you get some clues as to, what's going on and why, you might have significant amounts flowing in and then significant amounts flowing out, and that cycle sort of repeating. But we're certainly clearly in a new upward trend in terms of ounces held by SLV since the middle of last year, so over the past year or so.
Peter Krauth emphasizes that silver's industrial role is unlike anything gold offers, providing it with a built-in demand floor that continues to grow. Each solar panel requires approximately 20 grams of silver, contributing to the global push for renewable energy. With solar installations booming worldwide, especially in China, this single application already consumes roughly 1/5 of the annual supply. Electric vehicles are another significant driver. Silver is essential in batteries, wiring, sensors, and touchscreens, and as EV adoption accelerates, so does silver demand. Electronics, more broadly, depend on it as well, from everyday gadgets to advanced medical devices. In healthcare, silver's antimicrobial properties are used in wound dressings, surgical instruments, and even water purification systems. Silver's position today feels less like a side story to gold and more like a force in its own right. Industrial pull, investment flows, and tight supply are converging in ways that leave little slack in the system. Once the financial crowd realizes how little metal is available, the pace of price moves could shift from steady to explosive. Will the coming years prove that silver is no longer the understudy, but the metal that sets the tone for the next phase of the market cycle? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.